Assalamualaikum and welcome to the Business Hour again here on Unity FM. I'm your host Umar Rashid, and the Business Hour, this is a show for anyone wanting to know more about all aspects or any aspects of business. So whether you're a business owner, a budding entrepreneur or an employee, the Business Hour here is the platform where we will have guests who will share their experiences and expertise on all things business. Now, before we get to our guest today, if you would like to know more about the show and wish to get involved or even appear on the Business Hour, then please connect and follow me on either on LinkedIn, Twitter, Instagram or Facebook. My handles on all those platforms are at Umar Rashid HR, so please do get in touch. Now, my guest today, over the last 10 years, he has been building, investing in leading brands across Europe and the Middle East with key experience in technology and the Islamic economy. He has multiple exits and has explored the world and developed businesses across Europe, Middle East, Africa and Southeast Asia. He's also launched the UK's first digital Islamic banking proposition and is now a fintech consultant working for various companies across Europe and the Middle East, and is involved in some of the largest groundbreaking projects in the industry. Relentless in his pursuit of self-betterment, he searches in every new chapter of his life a bigger challenge to further find himself and develop his experience, which ultimately is to empower people, societies through commerce and opportunity. Brothers, sisters, today we have Akmal Saleem with us today. Akmal, brother, assalamu alaikum.
Walaikum salam.
How are you?
Alhamdulillah, I'm very well. How are you?
Not too bad, not too bad. Just before we started, you actually shared something very interesting with me, which is Birmingham isn't your actual home.
No, it's not.
So where is your actual home?
So my actual home is in Medina in Saudi Arabia.
MashaAllah. Very, very lucky, brother. Very, very lucky.
Alhamdulillah.
So how many years have you been in Medina, actually living in Medina?
So it's been 5 years. The last couple of years I've been here. During the pandemic, I've been back in the UK. Before then, it was I was there in Medina. Yeah.
Okay. So just quickly, briefly, before we get into some of the topics we talk about, tell us more about Akmal Saleem. How has Akmal Saleem eventually ended up in Medina and also temporarily here in Birmingham?
Yeah, it's. I'll keep the story short, but. I've come full circle actually being here, even at Unity FM, interestingly, which I had connected with many years ago. But I went to Aston Uni about 14 years ago now. That was my first real.
I know we're on radio, but mashallah, you don't look like you've been uni 14 years ago. That's
Thank you.
Mashallah, very good.
Okay, and so I feel it though.
We all do.
So I was here at Aston. I studied. I graduated in marketing. After leaving uni, I worked for a year, and at the same time, I was building my first business. I say it was my first business. It was my first real structured business, I should say. And then during the pandemic, well, I say pandemic, sorry, it was actually the recession, sorry, back then. I decided to leave my job and move full time into business. I did that, and I set up my first company, which was an agency. That agency grew here. We started to work a lot more with the charities. It was called Brand 786. We worked with a lot of charities and really pioneered communication within the space at that time within the kind of Muslim market, because I felt that our organizations, our companies, our businessmen, women just weren't communicating in a way that was similar to the mainstream. And so that was the problem that agency was fixing, and the agency still is continuing. It's over 12 years old now, and and even though I sold it earlier this year, it's still continuing. Whilst I was actually building that company, I had a small family in Saudi Arabia actually invest into the company. And after investing into the company, I moved out to Saudi Arabia and I grew the company there. One of our landmark projects out there was called One Day in the Haram, which was a first feature-length documentary on the Haram since National Geographic, and that was an amazing project, mashallah, for us to win,
yeah.
and we had a great time doing it. It's been aired here in the UK and everywhere, and I'm sure many of the listeners have already come across it. So winning that was a really, really important project for me, because it also was the pinnacle of that company in Saudi Arabia, which I then ended up selling to another media company. At that point, though, I stayed in Saudi and I moved to Medina, which was a lifelong dream. And a new chapter for me on a business and a commerce level started, and that's when I really got involved in Islamic investments, and venture capital, venture building and investments. That's when it really started for me.
Okay. I'm actually glad you've kind of finished on those two things, because that's really what I want to talk to you about today, especially around investments. Now, there's a lot of, we've got Dragon's Den, we've got, I suppose, even the one that with Alan Sugar on there, he initially wanted to, the Apprentice.
Yeah.
We've had these sort of concepts, and I've always been interested. I've been approached. A couple of people have said to me, look, we would like to invest in you or whatever, and I've always just taken it as a bit of a blasé statement, because I just don't know where to go with it. So before we delve into it, just from your experience, especially here in the UK and maybe Birmingham, what's your view? What's, you've got your ear on the ground sort of thing. How is it in regards to investments? Has COVID in the last 12 to 18 months taken a massive hit? Or has there been more demand? We've heard so many stories how many people during COVID have lost employment, who've then taken the leap to start their own business but need to start somewhere. What's the investment scene like?
Well, I think it's obviously a huge question, because I want to answer this question more in terms of personality. I'm going to just slightly change, because there's investment is in everything, and I think it is really important to mention that a lot of people think that only wealthy people can invest, and this couldn't be further from the truth. So people think, oh, when I'm wealthy and I have some money, then I'll invest. That's the first issue I have when it comes to investment. Second thing is, people feel that only bankers, finance people, accountants, or anyone who has a job role or education within finance of some sort are qualified to make investments. Completely wrong. That's another statement I want to make. Okay. Because actually, yes, people who deal with money, people who are in that space, they understand the mechanics of investing, but does that make them brilliant investors? Absolutely not. And so that's another misconception that's really rife. And people in finance won't like me saying this, but it's the truth. So putting those two kind of statements out there, what does the investment scene look like? The investment scene is very different per person, because when you're investing from your own personal profile of risk. That's the core of investing, risk. Everybody has a different risk profile, and everybody has a different risk appetite. And so, whilst COVID has been detrimental in so many ways on an economic level, actually it has presented phenomenal investment opportunity for those who've seen it. Mm-hmm. So, conservative people in this space held on to cash, liquidated assets because they felt like they needed it. Higher risk or medium risk investors treated it differently, where they took the opportunity to buy more assets because they got them at a better price, at cheaper rates, below market value, for those people desperately trying to liquidate, thinking that the cash was important, knowing that this recession or depression that would come after the pandemic would lead them into a stronger position 5 years down the line, 10 years down the line. So they made some very smart investments, in my opinion.
Mm-hmm.
So the investment scene is it's too difficult for me to answer this on a one brush stroke. Instead, it's about everybody, their personalities, their profiles, their appetite. When we look at more general aspects of investing, what we would be looking at here is stuff like, what are the common investment themes that are going around at this moment of time? And and in this you always find the common: property, real estate and property. It's never changed and never will. Very strong asset to invest into, will always be a very strong asset to invest into. That won't change. Land, property, real estate, always a strong class, and that's why people see the most long-term growth in this area, and that's not changed. Then you have things like stocks and shares. This is more volatile. Over the last few years, again, certain companies, for example, within digital industries, healthcare industries, have really benefited over the pandemic because those industries have grown exponentially.
When you just mentioned stocks, where does Bitcoin and all of this fit into that? Is that a type of an investment? Because we heard it, I think it was, again, 12 to 18 months ago, we heard about, if you had bought a Bitcoin 5-10 years ago for, I don't know, a very, very small amount, today it would have been worth so much. Is there genuinely a future when it still comes to like all these Bitcoins and stuff like that?
So I was literally going to move on. The next class I was going to say is cryptocurrency. Yeah. So you've got real estate, and you've got then stocks and shares, and then I was going to say then you've got a new asset class that's kind of growing, a new era, which is like cryptocurrency. But even before cryptocurrency, you have startup capital, startup ventures, startup investment, which is also an ecosystem which from a Muslim community perspective, we're really far behind. So you've got these, and of course there's so many more different areas. There's agricultural investments, and there's so many other places that people are looking at, in terms of developing and looking at invest. But I'm going to stick to these, firstly because this is where I'm more versed in, and I don't want to speak about things that I don't have as much knowledge on, but also these are the areas that I'm most passionate about, the ones that I've kind of mentioned, and more so about venture investment. That's the one that I'm most passionate about. But if we just talk about crypto quickly, absolutely.
What are the very, very basic things that they should be looking out for? What research should they do when it comes to a cryptocurrency? Well, I get it that might be a very loaded.
No, it's a very loaded question because I'm not going to give like investment advice, right? On this, it's not what I feel comfortable doing in any way. I think what people need to do is look at the framework. The framework is do your research, and understand where a crypto has come from. Then look at the market value and ways that crypto will get bigger, and then decide if it's something that they want to invest into. For example, let's just look at the key one that everybody knows, Bitcoin. Yes, a few years ago it wasn't worth as much, but it wasn't worth as much because it was not accessible. So in order to invest into that, which was a very, very good investment, you had to understand the technical aspects to invest into it and then manage it, which majority of people couldn't do, didn't want to learn how to do, and didn't want to expense and invest their time to do it. The ones who did benefited significantly. But the reason why Bitcoin has grown in value significantly has been because of the fact that mainstream has started to integrate Bitcoin into the financial ecosystem of the world. So naturally, if you can go and buy a Tesla with a Bitcoin, of course there's suddenly going to be value in it. Or companies start to accept Bitcoin as a payment suddenly, that's become accessible, the value of that particular cryptocurrency has naturally increased. Now, Bitcoin is leading the pack, and it will continue to grow, whether it's steady, exponentially. This is just a question. But as it becomes more and more accessible, more and more people start to invest into it, start to use it for everyday purchases, the value of that cryptocurrency will increase. Secondly, what's happening is cryptocurrency is becoming an asset for individuals. And this is what's really interesting. And that is, for the first time almost in history, anybody can launch a cryptocurrency. By them creating their tokens, as it is in crypto, I'm going to keep it really simplified. For them to be able to create their own cryptocurrency means that if they've got a large enough network and have enough influence, people can, through the issuing of their own current cryptocurrency and tokens, create an investment platform in which they can express themselves. And that's something that's never been done before. And for influencers, and in this generation of people who are growing YouTube channels, TikTok channels, Instagram channels, if their followers and people that they influence start to buy into the crypto of individuals almost, which will happen in the coming 5 years or so, 3 to 5 years, the reward they will get with that influencer growing their own platform is that they will get a return on investment as that influencer grows, if that makes sense.
Yeah.
So suddenly, there's a really interesting landscape that's developing in this space for those who can see further enough forward and to analyze the market in a way. Again, there is so much risk in this as well, and that's important to state, that this is not a... There's many.
It's not a rich, a quick rich scheme.
No,
nothing like that. Yeah.
No. Anybody who's looking to get rich quick should turn off the show.
Please don't.
This is not. This is.
Yeah.
This is not an ideology that we buy into as people.
Yeah. Well, two things you said, which kind of also caught my imagination. Whilst I know we could speak about crypto probably for the whole show, sort of thing. You mentioned venture capitalism. Venture capital is a passion, and you also mentioned that Muslim startups are something that it bugs you, that they're not in the right state of in the right state of frame, or they haven't got the right structures in place, sort of thing. Very quickly, firstly, when you say venture capitalism, what does that mean? So for the arm banda, the average person listening, what does that mean when you say, I'm passionate about venture capitalism?
So the VC space is about growing businesses, startup businesses through the journey of that business. So breaking down the startup ecosystem, you have a journey, right? And I'll break the journey up because I think this will be helpful.
Yeah.
And that is somebody wakes up in the morning and they decide, you know what, I want to start a business. So they start a business. Now, successful businesses don't think of an idea. They think of a solution. Many people come to me, and I've said this many a times on different platforms, that don't think of an idea if you want to start a business, because you'll be scratching your head forever. Think of a solution to a problem that's ever present in your life or your industry, and go and solve it, and then monetize it and structure it so that it can become a solid business that can grow. That's the first stage.
Yeah.
In that process, you will then start a business. You will go out, you will start selling. This is what they call the pre-seed stage within the startup ecosystem. So you're pre-seed. So you haven't even put a seed in the ground yet. You've come up with an idea, stroke solution, stroke whatever it is, and now you're in pre-seed and you're planning it and you're thinking about how you're going to make this into a business. You might develop a technology, start to develop it, may open up a shop and start, or you might be engineering a food product. This is all pre-seed. What happens then is the startup ecosystem, the first time a company should go and raise money is at this pre-seed level. And usually at pre-seed, people will go to friends and family and say, "Oh, do you mind putting a bit of money into my company?" So my company, my dad was the first pre-seed investor in some capacity.
Yeah.
And it was my own capital. That was what I put in to start my first company. And then what happened was, as that company grows, then you realize, wait a second, I need more money. Now, in different capacity, if it's a trade business, people usually go to banks. The banks give them the cash to go and buy products. They then sell the products and they pay the loans back. That's how it traditionally works. Within the startup VC type of space, as I'm getting to, this is mainly in people investing into somebody's solution, which is more around technology. Because the banks don't invest into technology because it's too risky for them. So then you find private investors who want to invest into technology companies who have the ability to scale. After pre-seed, you get to a seed stage. And again, usually friends, family, angel investors, which people have heard many times, like your Dragons. Dragon's Den is more of a seed investment stage, mostly. And they will seed the capital by seeing that this person has created a company that has the opportunity to grow with potential. After you've grown out of the seed stage is when you come into what they call a pre-series A, and then you go into series A, pre-series B, series B, and then you just go down the letters and continue raising year on year or whenever's required. This is in essence the startup ecosystem and where the VCs, venture capitalists, sit. Because they will see an opportunity to put capital into a venture and then grow that venture so that when it gets to an exit point, whether it's an IPO or a buyout from a bigger company, then they will realize the return, which can be phenomenal.
What's the normal time frame? I take it certain investments, mostly people would look at long term, or would it be short term, or a bit of both?
No, the VC space is firmly more long term. So you'll be looking at exits from anywhere from 5 years to 10 years, depending on the investors, what their aspirations are. Naturally, VC investment and startup investment is a high risk activity, and so, but it's also high reward, but it can take time. Yeah.
And is it generally a one-off investment, or could it be a continuous of investments at different intervals?
So every time a company raises a round of investment, the current shareholders and investors will have the opportunity, of course, to what they call a follow-on investment and continue to invest further in the company if they wish.
Okay. Really, really interesting, Akmal Boy. We're just going to go for a small break. And inshallah, when we come back, I want to then talk a bit about the Muslim startup. I want to look at where does a startup start? How do they source these venture capitalists? How do they source investment? How do they then take their business throughout the whole levels? So that's fantastic. So you're listening to the Business Hour. I'm your host, Umar Rashid. We have Akmal Saleem with us today, and we're just going to take a short break, but please stay tuned. Welcome back to the Business Hour with me, Umar Rashid. Today I have with me Akmal Saleem, and we've been talking in the first part of the show about his business journey, how he sold his business or got investment from his business from Saudi Arabia. We then talked about how actually there is a lot of opportunities currently for investment, property always being one. Touched about cryptocurrency, which actually wasn't on my mind, but it did come into my mind as soon as we mentioned it. But then we've kind of talked about, venture capitalists, and you've kind of gone into what that's all about. So that brings us nicely to, so I want to kind of look at a bit of a scenario. So you've got a startup who, so like you just said, someone who starts a business doesn't start a business because they've got an idea. It's actually, they've potentially found a solution. And by selling that solution, then creates, obviously, that business. Now, so let's say you've got someone who they believe they've got a solution. They found a solution sort of thing. They don't have the luxury of investment from family or friends. They don't want to go to the bank for various reasons. How do they then go about finding investment? Do you know what I mean? It's not like you go to the high street and someone's got a shop and says, we're investment.com, please come in, sort of thing. So how would one start to kind of find, and what sort of things would they be thinking about? Because it's a big statement, isn't it? Come and invest in me, or I'm looking for investment. It's how much investment, what does that investment look like? If someone does invest, what's their return on investment? Or all of these sort of things, it's when you start to think about it, it's actually a massive minefield itself. So what would you advise at this early stage that someone should be looking for?
Well, I think again, there's different ways to approach it. My personal experience has taught me that when a startup wants to raise investment, first and foremost is they have to get their proposition right. That's really key and critical. They need to understand exactly what that solution is that they've created, that they want to monetize, that they want to create into a business. And then they need to take the steps of being able to articulate that to potential investors. There are many platforms actually that people can go and raise investment from. You have many crowdfunding platforms which people list their businesses onto. They present their business to thousands of investors, and those investors can invest into the business from as little as £50, £100, and own a share of that company. The UK government has also got many great schemes to help investors put money into startups and give them tax benefit. The SEIS and the EIS schemes are very good and are encouraging people who have capital to actually invest into startup businesses, because they will get tax relief on their investment, and so they'll be very well positioned to be able to do that. Why? Because they want to pump more money into the startup ecosystem. Many of our investors on a Muslim level don't understand that they have these opportunities, and we should be looking to utilize them. And so first and foremost, the person raising investment should understand that these schemes exist. They should register for them, because it makes their investment proposition more attractive. They need to make sure that they've done enough market research to justify what their proposition is about. they need to ensure that they've got the right financial forecasting, modeling to prove that their business model is actually sustainable and works and will return a profit at the right time. For example, investors in this space are very well aware that if we see a business proposition that says that it's going to turn a profit after 12 months, we'll never invest into it. Because we know that it's going to take anywhere between 2 and 5 years before you break even. No matter what happens, the most ventures will break even after between 2 to 5 years.
Just before you carry on, so you mentioned there, excuse me, you mentioned there about forecasting and, you know, the whole putting it into like a financial structure sort of thing. Now, say someone like me that's just very, sounds a little bit scary. It sounds a little bit alien to me. Yeah. So who should I then be leaning on to support me with that? How do I go about not knowing you know, I've just started an idea. I've got an idea, a solution, sorry. How do I then know how my 12 months are going to pan about? So how, you know, what tool support would you say someone could then advise on?
Well, startup advisors exist in the space. That's who people should go to. They should go to people who have built businesses, understood businesses, executed business, and that will be the best type of advice. There's many business coaches out there. I'm skeptical about those people, to be honest. My measure is always somebody who's created a business, whatever capacity that is, and grown it in some capacity, and experienced what that's about, before they give advice to other startups. I think that's really important. It will help you mitigate some of the risks when you're building these financial models, for example. Financial modeling is I say it's easy because, again, people in the finance space complicate these things. In essence, a financial model at the basic level is just understanding things like how many customers you anticipate, what are your costs broken down, and forecasting those properly in the right way, looking at what potential revenue you can bring in, and using these core components to create a model, and then going to your accountant, who will be able to help you definitely with structuring it, but using some business advisors or other people who can just help you structure that into a model if you haven't got lots of money, you know, because sometimes it can be a costly side, but if you don't invest into presenting the business in the right way, the likelihood of you actually raising the investment is also lower. So you can't just raise money because you think it's a good idea. Yeah, you're only going to raise that if you show financial modeling and you've invested in that. You've invested into building a good pitch deck. So that's the best way, in my opinion, of approaching that.
Okay. That's fine. And just to clarify, we're not all skeptical of all business coaches. There are some fantastic business coaches out there as well. Okay, so if you're a startup business, you're then in front of, let's say you're doing the pitch sort of thing. What is the expectation, or what's the arrangement is probably the best word to go about around investment. So does the startup business generally say, look, for X amount of investment, this is what you would get? Or is it that the investor would say, well, okay, look, listen to what you said. I'm prepared. I think this has potential. I think this has got legs. I'm willing to kind of invest X amount for Y or something like that. Or is it a combination of both?
So this depends what stage you're at. And also, again, the financial projections should inform of how much money is actually required.
Yeah.
How long that money will be used, as in how, and this is what they call a runway, and they call it a burn rate. So what runway do you have in terms of how many months do you have to survive if you didn't bring in a single pound as that's where the investment will help. And what's your burn rate, which in essence is how much money are you burning on a month. These are the kind of metrics that investors should look at. It becomes more difficult at pre-seed and seed rounds earlier on, because financial models are just a guide. You only until you start to operate in the market, execute marketing strategies and activities, do you get to see what your cost of actually acquiring customers is, etc. So the financial modeling, a business model will constantly pivot, move, be dynamic, and that's why the startup culture is known to be agile. Your point about valuation is key. What is a valuation of a company? So how much money, how much investment how much equity should an investment actually get you? This varies. Most seed startup companies will use market research with competitors or potential people in the same industry to create a valuation and then show that their financial model backs that valuation. Investors will negotiate to get the best deal in terms of how much equity they can buy with their investment. As you go further up the life cycle of a business, that becomes more rigid. So at seed and pre-seed, you'll have more room to negotiate a deal, similar to, again, Dragon's Den, where they'll say, we'll give you all the money, but we want twice as much equity, etc. Whilst in Series A, B, C, etc., those negotiations, although they happen, no doubt, are not as flexible, because a company has gone on a path and it's already raised investment, it already has a structured shareholding, and therefore it will be a bit different. I think it's also really important to talk about things like smart capital. Not all of the investment people raise needs to be financial. Someone may be offering a lesser amount in terms of actual cash injection. However, they may be taking a greater portion of the company, but that's because they may be a smart investor who has access to contacts and market that the business needs.
So like introductions to certain
absolutely
customers, suppliers,
absolutely,
etc.
If I can open up the door to get a product into Tesco,
yeah,
that's worth more than hiring the person in my operations team to go and build the relationship and then get me into Tesco.
Yeah.
Get the business into Tesco. So naturally, smart capital is really important as well to consider.
Should an SME business or a startup look at just one investor, or what happens when there's multiple investors? Do things then get a bit muddled? Do things get a bit confusing? Does one investor might want X and someone else will want be Y? What's your experience around that?
So in the past, there used to be management issues, people investing multiple, the company managing all of those investors. However, technology has made it a lot easier. So there's a really great platform out there called Seed Legals. This is the platform that most startups in the UK are using at the moment, because it manages all of this. It manages legals, documentation. It's very, very fairly priced. And the shareholding within a company is called a cap table. So it manages the cap table depending on when a new investor comes in and they put money in, how many shares should be inserted, diluted, etc., the percentages. So it manages all of this, which traditionally would cost a lot of money with lawyers and solicitors and also people within the space of organising and shareholding, etc. So is there a particular thing, one investor or more? No, this is really just comes down to access to investors. Okay. Some companies, is it better to have less shareholders? It can be in certain situations. In other situations, it's better to have more. Hence the reason why people go down the crowdfunding route and have thousands of investors. But again, those crowdfunding platforms manage the shareholding of all those crowdfunders so that it's easier for the startup.
Okay. You talked about earlier around, you pitch, you go through rounds, etc., etc. Yep. So it sounds potentially like a bit of a lengthy process. What is an ideal time frame if someone is thinking of going out for investment? What's an ideal time frame for them to kind of, if they are successful, that they should be looking at?
In terms of raising?
Yeah, and let's say receiving or getting an answer.
There's again, this will depend on how much they're raising.
Okay.
So, if somebody's raising only 100, 150, 200,000 pounds, naturally it'll take less to somebody raising 2 million, 5 million. But again, it changes. There's certain VC funds or other investors who have larger amounts of capital to deploy.
Yeah.
So this, what's a typical size? I mean, anywhere between 3 to 4 months it could take to close an investment round. In bigger circumstances, it can take 6 months, 9 months if it's a very big one. So it's a mixed bag. It depends on the proposition, but at the earliest stages of a company, anywhere within 3 months you should be able to close a round, especially with the likes of seed legals and these technologies that help you. It's not hard to do this stuff quickly.
Okay, if someone is unsuccessful, one, I'm guessing they shouldn't be disheartened, but would an investor or the platform provide them with feedback around, look, this is where, or these were the risks, or these were the reasons why, are there potential second, third, fourth opportunities for someone to go back and get investment?
So that's a good question. So in terms of if somebody fails a company, can they go and raise more money? Not for that company, but maybe a different company, you're saying? Or
no, so it could be, look, if I've got a solution,
yeah,
and I've gone to pitch for investment, but the investor feel actually it's not worth,
so they've been rejected.
Yeah, they've been rejecting that. So rather than being disheartened or thinking, okay, but if they've got that belief, do they get some feedback around this is the reason why? And then they're able to maybe make some modification. It's like failing an exam, possibly, isn't it? And then you get some feedback, and then you have an opportunity to kind of go again.
I think, firstly, there's a lot of time wasters when it comes to investment. There's a lot of time wasters.
When you say time wasters, people asking for investors or
both sides. Both
okay.
sides.
Yeah.
Because you have propositions, especially within our community, unfortunately, and it's disappointing and disheartening in some way, where we don't respect our own businesses when we go out to raise capital.
Mm.
So we feel sometimes that we turn up. I get people asking me to invest into their companies on a daily basis.
Okay.
On a daily basis, I have people asking me.
Okay.
But the way they ask me, I would never invest in their business ever.
So are these
I'll just get
Muslims
a random,
or non-Muslims?
Yeah, Muslims.
Okay.
Mainly Muslims who will just message me on LinkedIn and say, they literally will message me on LinkedIn and say, I've got a project. I want you to invest. I'm a Muslim.
Okay.
I'm not going to invest into a company because you're Muslim. I'm going to invest into a company because you have a good product. The fact that you're Muslim makes me happy.
Yeah.
But this has to change if we're going to grow our economies, because and that's my point. We have time wasters on both sides, because then we'll have investors who will speak to startups who are good startups and drag them along for 3 months and then just say, actually, no, I'm not interested.
So at what stage, at the due diligence stage from both parties, what's the best way to, maybe from your experience, kind of suss that out? I mean, I know it's a bit difficult, but there
for me,
something...
I can usually suss a business out in the first meeting, personally, because I respect their time. So in the first meeting, I'll know whether or not there's a good chance I'll invest in that company, or would want to at least understand if I want more information.
Yeah.
That might mean that I might not invest in that company only because of a business model situation.
Mm. Not a personal situation.
Yeah, absolutely. Yeah. So, it doesn't mean... And again, being a good person doesn't mean that you have an investable business.
Yeah.
And again, this is where we are very emotional people. And so we feel like if somebody says no to us from an investment perspective, we believe that that's because we're not good people, or the person who was going to invest is not a good person because he doesn't think that. It's got nothing to do with that. We have to detach the emotional side, and we have to just make our companies really... We just have to give them the respect.
Yeah.
When somebody comes to you with a really good business proposition, which is well thought out, well presented, and they present and they give that to you, you want to understand more. Then you'll meet the person, and then you'll understand, is this person truly somebody who's going to want to see this business through, or are they going to just stop after 6 months? Have they got the capacity to actually make this dream of theirs a reality when it starts to get tough?
Is it wrong for a startup to come to an investor with the dream of, look, my long-term game is to actually sell this business and make 5-10 times more than the investment and sort of stuff? You know what I mean? It's like sometimes the investment is, look, I want to start business, and basically this isn't a long term game. This isn't going to be a family business. I just want to. I've got a concept. I think it's valuable. I want to launch it and then sell it off for millions.
They're the businesses I'm interested in.
Okay.
They're the businesses most investors are interested in.
Okay.
If somebody comes to me on a personal level and says, I want to launch my own family business, which doesn't have an exit, so
Yeah.
it never has an opportunity for you to get a return on your investment,
Yeah.
but I want you to invest into it. Of course, no matter how good that business might be, what's the return for me to invest? What is that not then just charity? Because you're helping somebody get off the ground. That's a social investment then. Because you feel like that person needs the money to build something for themselves.
Okay.
Absolutely. There's nothing wrong with us wanting to make a return. We can look at some of the most incredible Sahaba, Abdurrahman ibn Auf, for example, which many people will know, and as the wealth that the Sahaba had, it was beyond what we can comprehend. There's no issue in us wanting to make money. How we use that money is a different discussion altogether. But from our perspective of doing business, of course there has to be a return. There has to be a desire to make a return. And so any company that actually models their business so that it exits is a clever business person who's building a viable model, who wants to get a return for their investors and themselves.
Okay. Lastly, from your experience, I think I sense a bit of frustration towards, let's say, the Muslim community, because I think we kind of spoke a bit of it, which is within the Muslim community there is a lot of potential, there is a lot of drive, but sometimes through certain actions we let ourselves down, and actually through that it has a bit of a knock-on benefit. So just quickly share maybe some of your experiences which kind of sense your frustrations, but then as the Muslim community are listening, what advice and guidance would you give them?
So my frustration comes in the startup ecosystem because we have great potential. We have great potential, and we can grow as a community. The financially stronger that we get, the better and stronger our community gets. And so the frustration is that because we want to earn a little bit extra every year through practices like avoiding tax and avoiding structuring a business and doing stuff like this in the right way, in the long term, everybody who is doing those activities may be benefiting their own immediate families, but it's not having a benefit on the wider community. And therefore our startup ecosystem is breaking because it's become individual. An ecosystem has all the types of components: investors, customers, members, founders, shareholders, silent partners, smart investors. It has all of these components. So when you want to create something really individual, it doesn't work. So my frustration lies around that, because we don't think long term enough. So for example, I had a Middle Eastern investor a partner of mine, that we were buying a company here in the UK a few years ago, and it was the perfect company for them to buy, but they had no accounting system. They had no real clear accounts that they could present to us, even though visibly you could see that they were a good, strong business. They were doing that because they were avoiding tax, and because the owner wanted to earn £50,000 extra a year. And because of that, and because of the structure or the non-structure in the company, a company that should have been worth a few £1,000,000 more was at, the
fraction of it
was the value on the actual book value as it is was so low compared to what it should be. But no investor is going to ever buy anything but the book value of a company. Or around about the book value, a little bit more maybe, or a little bit less, but not 50% more. Just because, but that person missed out on millions of pounds because he wanted to make an extra an extra 250, 300 in 10 years.
Short-term gain, long-term pain, isn't it?
That's it.
Yeah.
And that person will never be able to continue running the business, because as they get older, they haven't got the same drive, the same energy, the same ability to continue running the company at that level. The point of doing business comes back to what you've said. A pertinent point is, after 10 years of doing a good business, you will have a buyer who will take that company from you. If you've done it right, you will achieve a very good exit. Another thing that I was having a conversation with one of my other close friends in business was, we have this thing about succession within the community, which I think we have to talk about, and it's not something that has been talked about at all. In fact, I hardly have ever heard people. So, which is family-run businesses force almost their children to continue the business, but they don't have the skill set or the desire to want to continue. It's actually better for them to sell the company because they will achieve an exit from it, rather than let that company basically die a slow death because the people in charge just don't have the desire or want to even run it. So making decisions at the right time from family business perspective, it's a unique time in the UK. We haven't come across this point, but because of where we are as a generation, family-run businesses should really consider how they want to do a succession, rather than just forcing to think that their children will run it.
Okay. Akmal, really enjoyed having you on the show today. Really insightful. If anyone wanted to get in touch with you, how best can they get in touch with you?
LinkedIn is the platform that I usually it's the only platform that I'm really on. So I'm there. I'm quite active. So anybody who's listening that wants to connect and if they can benefit, then alhamdulillah.
Okay, thank you very much. You've been listening to the Business Hour on Unity FM, the only show for all things business. We'll have guests next week as well, and they'll be sharing their expertise and all their business journey as well. If you'd like to get involved, remember you can connect with me on LinkedIn, Twitter, Instagram, Facebook by searching my handle at Umar Rashid HR. The Business Hour will be back inshallah next Tuesday at 6 o'clock with another fantastic guest, so please make sure you tune in. Until then, Assalamu alaikum.
Assalamu alaikum.